This is Matt Russell from the FX Power Course, and welcome to the DailyFX walkthrough.
So here are the four pairs that I will be discussing this evening: the Kiwi dollar, Aussie dollar, the Euro dollar, and the dollar yen. So let's go ahead and pull up the charts. The first chart is the Kiwi dollar, and as I was mentioning yesterday, we might apply this very short-term support line. This line initially did hold, but then eventually it did fail. Personally, I am long from the 54.12 area. I've placed my stop below the 52.77 low, and I am expecting, well, maybe I wouldn't say expecting, I would say there's a 30 to 40% chance here of prices finding a bottom before they take out that 52.77 low. If they do, this could be a 1-2, and then wave 3 should exceed this high over here, which is the 55.50 area. So moving forward, I like this trade, especially now with prices near the 53.18 area, excuse me, and placing a stop below that 52.77 low. The next chart is the Aussie dollar. Not much has changed here. I was mentioning this borderline doji pattern, and I personally did not find any good risk-to-reward entries here, but as prices are heading lower, I believe this low here, 65.36, is the low of the doji candle. So, you know, depending on your individual risk parameters, this is a trade setup that you can look that might materialize over the next day or so in terms of getting an entry close to that 65.36 low of the doji. The next chart is the Euro dollar. This is the daily chart, and if I wanted to use the daily chart at first because we can see a very strong rally here, and we can argue that this price action over here is corrective. Zooming in a little closer to see if we can get any good risk-reward entries, which I have not been able to find. Here we can see prices are still contained within the channel. I was also mentioning how we might apply a simple support line here, but that in fact did fail as well. So right now I'm sort of in a holding pattern in this pair, possibly that 28.90 area, which is the 78.6 of the entire rally from below the 125 figure to near that 147 figure, could be an area of a last stand, if you will, of support in the pair. The next chart is the dollar yen, and let me zoom here to the hourly chart. I was mentioning 2 reports back about the breakout trade above that 90 figure, and we might see a 100 pip rally, which is what happened, about a 120 pip rally. But if I look at this chart today, I actually noticed what could be a head and shoulder pattern forming on the pair. We had a little bit of a spillover here on the right shoulder, but personally I would hold a bearish bias right now on the pair with a stop above that 91 figure, or above the high of this candle over here, which is about the 91.25 area. Again, this is a head and shoulder bearish reversal pattern, which could be forming right now. It's not the cleanest pattern in the world with that spillover on the right hand side, but it's something we can certainly keep our eye on moving forward. The first area of logical support would be that breakout area, which is noted by this white line here, which is at that 90 figure. So maybe we can use that as a gauge. If we get a close beneath that 90 figure, we can be a little more aggressive on the short side. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXEM. Thanks for listening.